Welcome back to another episode of Key Factors Podcast, Real Estate AF, where the AF stands for and financing. And I'm your host, Mark Jones, and we are powered by ReviewMyMortgage.com, the largest index of mortgage programs in the nation. And first off, as we start this discussion, I do want to thank everybody for liking, subscribing, sharing the episodes. JC, if you can throw up that reference real quick. We have finally reached 20,000 subscribers, and I'm very, very thrilled. It's taken us almost 4 years to get there, but hey, like they say, consistency is everything. So in the spirit of consistency and in the spirit of starting a new year, I wanted to have a discussion with only lenders, and in this case, only my lenders. A lot of folks would ask, hey, how come I don't see your loan officers on the podcast? And for various reasons, but hey, they're shucking and jiving and doing what they have to do, to get people into homes these days. And today we're going to talk about it. We're going to talk all about it in addition to, what they're doing in 2025 differently, what they're doing, that they're bringing from 2024 into today. And maybe some tech tools, some things that they're going to be leveraging, but we're going to hear all about it from them directly. So without further ado, let me introduce my guests today, which they are all loan officers for iBank Mortgage here at La Cantera in San Antonio. Who wants to go first? Let's start with Preston. Preston, how you doing, man?
What's up? Hey, I'm doing fantastic. How about yourself?
Doing well. It feels good to be back in the seat and getting my free therapy. It's been a month since I took a break, jumping back into the saddle of doing loans, primarily. But if you could tell us a little bit about yourself, some of the folks tuning in, it's probably their first time seeing you, rap on the mic.
Yeah, so my name's Preston Jones. I have been in this industry coming up on my 5th year now.
Wow. Wow. No, they're here. What's the deal?
No, they're here. You don't need to zoom in. That's fine. But yeah, so I've been in the industry for about 5 years, got in towards the end of the COVID boom, so to speak, and then
mid
October 2020. So yeah, so kind of coming towards the end of that COVID boom, and getting that COVID boom, and worked my way here. Been through a couple different markets in that short time frame.
Yeah. The good, the bad, the ugly.
Yeah. So we're here on the rise of 2025, if you will. So excited for this year. Come much.
Good deal. Well, we're going to be talking a lot and getting to hear some of your insight on your loan plans, things of that nature. So I want to be transparent as possible with these folks out there.
Yep.
Next on the mic is Nicole. Nicole, how you doing?
I'm good. How are you?
Doing well. It's been a little while.
I know. I went and had a baby.
You went and had a baby. I like the way she puts that.
Yeah. It's been crazy, but here I am going on. I think I'm at year 6. So I'm 1 year ahead of Preston, but I got back in late 21. So it's been a wild ride. I can't believe I'm still here.
Absolutely. And it speaks volumes for you being here. I've gotten to see a lot of your growth throughout the past several years. Gotten to take several awards trips with you, getting to be involved in kind of the bird's eye view of what we do on the lending side of things. You've also been an advocate and kind of a test dummy for some of the tech tools that we've been working on and playing with. But yeah, excited to have your opinion, your feedback on this discussion today.
Me too.
So last but not least, we have Destiny Holloway. Destiny, how are you?
I'm good. How are you?
Doing very well. So with you, Destiny, this is your first time on Key Factors Podcast, Real Estate AF. Could you tell us about yourself? Like these two kind of like skimmed over who they actually are. They're like, let's just get on with it. But if you could tell us a little bit about yourself.
Yeah. So, I just hit 14 years since I got my license. So I've seen every market, I think, until this year. And then I was like, oh, a whole new market. So maybe I haven't seen it on it.
Yeah.
But, I've worked with a lot of different companies. I've done broker, I did retail, my favorite, kind of been all over the place from California. Been in Texas. I just hit 3 years 2 weeks ago.
Good deal.
So it's been
3 years in Texas.
Yeah.
Okay.
Yeah. So California, Hawaii, kind of lived all over the place. So Texas is definitely my home, and it's my favorite place to do mortgages. So definitely here to stay.
So I'm not going to let you get off that easy. So what got you into the mortgage?
It's actually a very interesting story. So I was going to school. I was going to college. I was broke. I was double majoring in business and foreign communications. And I was working at a grocery store, and someone came through my checkout that was a loan officer. And we conversated. It went really well. And he told me you can make a lot of money. And I was like, okay. So I applied for the job. I got the job pretty much on the spot. I showed him my first day at work, and he puts a phone book in front of me and goes to the ends, and he's like, start calling, and walks away. I was like, okay. And so I started out just being a dialer. I got licensed in 6 months and never looked back. And
Wow.
quit school. And it was a good decision for me. It was the right thing for me, but it was a big deal.
Absolutely.
yeah.
No, I very similar story in my upbringing in this, not necessarily the grocery store side, but the leading school to jump into commission type sales so that I could help as many people as I possibly could. At the time, it was more so investment banking and stuff that really, when I first got into it, I thought was like, oh my God, this is going to be the best. I'm going to be this investment banker, yada for Chase. And I was essentially just like referring business to a financial advisor, opening up checking accounts. And it just wasn't what I thought it was going to be when I switched from hourly to commission. Then jumping into the real estate side of things, God, a whole new world.
Yeah.
Survivally. Yeah, definitely. Well, today, guys, we're going to be talking about what to anticipate in lending for 2025. We're already just damn near a month into this year, and we're already seeing, in my opinion, a little bit of change in the sentiment in buyers out there. We're seeing a lot of folks still on the fence. We are seeing, lenders drop out like flies. We're seeing the same thing on the real estate side. I'd love to get your thoughts on that. Matter of fact, before we do that, let me see if ChatGPT can tell us how many people have not renewed their license. Are you able to give me the statistics on real estate renewals for their license in 2025? First, we're going to look at the real estate, January 2029, conversion there to make this figure. I wish everything was that easy. Let's see. Real estate license renewals are not yet available, typically such to apply to blah, 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 blah. Well, heck. No, that's not even it. I know, and you can go back, I know that it is a daunting number in regards to the amount of people that are not renewing, and even a equally or comparable number to the realtors and lenders that only had one transaction out in all of 2024. So I want to open it up to you guys, whoever wants to take this first one. But what do you foresee? And this is very general, and then we can dive into many parts of it. But what do you foresee the future looking like in lending? Well, let's start with 2025.
Well, for me, even starting out this year, the end of last year, and just full transparency, the end of last year, didn't have a lot of credit pulls, didn't have a lot of people trying to apply, finishing off the year. Already starting off this year, I think I have maybe 5 to 10 credit pulls that I've gotten just this month. And it seems like people are starting to really understand that these are the rates.
Mm-hmm.
These are what the rates are. And it doesn't, when you tell them what the rate is, at the beginning of 2024, you'd say the rate was whatever it was, they would have the same reaction and go, oh, that's high. I wasn't ready for that.
Mm-hmm.
And that was probably from 23 all the way to 24. Now, whenever you tell them the rate, that same response isn't there anymore. It's not, oh my God, it's okay. It's 6.5. They start calculating in their heads.
Sure.
They start thinking about it, and it's not as big of a shock to them anymore. So I'm thinking, 2025, we're going to start to see a lot more buyers who are understanding, because there are many people in this world that can still buy homes. It was kind of getting over that shock of the rate jumping up from what they were at one point.
Yeah. How about anybody else who wants to take this? And it's a very broad question. I mean, truly kind of like the perception of what you're feeling right now based on the end of 2024 as we roll into things?
So I on the opposite end of the spectrum of Preston, I get a ton of credit pulls every month. I get a ton. I think so far this year I'm at 32
Mm-hmm.
and we're on the 29th day. So that's
I think
almost,
you're at like the,
yeah, I'm at a lot.
who's counting? Yeah.
But I get a lot of opportunity to help people understand what their options are. And let me tell you, being a retail mortgage lender, you are not working at a bank. You are not getting 800 credit score buyers with 10% down. You're getting people who are like, I get my cash refund coming in like 4 weeks and I'm ready to buy a house. I have a 608 credit score. Let's go. And me being the rose colored glasses gal that I am, I'm like, okay, we could do this. And then I sit with Jackie and I'm like, okay, here's this really great applicant. And, the buyers in this market right now are not a cakewalk. And I think that's what's scaring real estate agents is that because it's not a cakewalk, it's a lot of work. And 2 years ago, it was easy because the people who had great credit, W-2 for 10 years and have a 401k with all of this money in it, those buyers are settled and they don't need to, they're not having more kids, or maybe they bought a house with the future in mind. And so I feel like today, what we're working with are those people who are like, okay, I think it's my time to shine. And we have to dig so deep. And I think it scares the agents that they're like, and this is just my perspective.
No, absolutely.
I have qualified buyers. I have these calls. I tell them like, hey, I know you are concerned about your credit, or you're concerned about this one collection account or anything, but we can do this. And I stroke their ego and make them feel really good. And I'm very optimistic. And then they go to a new build.
Mm-hmm. Yeah.
Because agents are like, well, the interest rate. And I'm like, I get that. But like for me and my husband, we just bought in December, but we were torn between resale and pre-owned, or pre-owned and new, but we opted for pre-owned with the higher interest rate for many different reasons. And if it fit our long-term goals and what we want to do. And, if we were to sell, there's just so many more things. Like we had the opportunity to get a 2.99% interest rate.
Sure.
And shop for $200,000 more, but right. that wasn't what we wanted. So I just think a lot of agents sell on interest rates versus quality of workmanship and understanding and peeling back the layers of the onion that is our client, and understanding their long-term goals. They just we're all desperate. So that's just my perspective.
Well, you raise a good point that I want to bring up later in this discussion, which is new construction, the pros and cons of it. So guys, if you're listening now, hang tight for that discussion as we bring that in later on. Another thing that you mentioned that I've been having this discussion, and now that I'm heavily doing loans, probably have just about to say a lot of credit pools as you. I'm hearing a lot of the same trends, or seeing a lot of the same trends. 90% of my pipeline are folks that did not jump at the opportunity to purchase in 2020, 2021 when rates were low. And it's not necessarily because they didn't want to. It was more so a situation because they couldn't at the time. Mm-hmm. So now one way or another, they have on their credit, taken the advice that we've given them back in 2020, 2021. Saved a little bit more for down payment. Just gotten tired of paying rent. They're now throwing their hat in the ring and understanding that, hey, the rate is the rate. At the end of the day, I'm going to build some equity on this thing, and hopefully leverage it down the road. But the idea behind why they're willing to, one, homeownership, you can't deny that. But the second is coming to terms with reality. The expectations, the payment expectation of, I'm not going to think that I'm going to buy a $300,000 house and pay $1,900 a month. It's gone. The only way that comes back is if there's some type of pandemic in there. And I think we have learned from that to know that we're not going to drop rates that low and keep them that low for that long. Because let's face it, and we'll talk about this topic as well later, which is if rates do end up dropping, there's going to be an adverse effect to that. And like I said, we'll talk about that here in a bit. So Destiny, how about you? What's your outlook on 2025?
Yeah, I'll play off what she said too. It's a really interesting perspective because I think that a lot of us see ourselves as salespeople and people see us as salespeople.
Yeah.
And this environment is creating more of a technician. Like someone who's going to get their hands dirty, someone who's going to say, okay, your tax return's $4,000. What is the best utilization of some money? Are we going to pay this debt? Are we going to do this? How do you earn some money? What works for you? How are we going to get there? Rather than just being like, okay, yeah, you got a new bill. Like, that's cool. It'll be fine. You'll get your 2.99. And really getting your hands dirty and figuring out what's going to work for that client versus just, surface level, not being a salesperson, being a technician. I think that's the biggest thing that is also creating those non-renewals of the licenses too.
Yeah.
I think those people they didn't, if they got their license during COVID, maybe they didn't, their foundation wasn't technicalities.
Mhm.
It was fees. Yes, I see loan applications are pouring in insanely.
Well, I mean, that's a great point. I mean, let's say you jumped into this 2020, and matter of fact, two of you are in that group of the 2020, 2021, whatever you want to call it. But I can vouch for, let's say, Nicole. Her first year was her toughest year. I mean, it took a little while to get it going, but once she did,
9 months.
yeah, thank you for being honest.
Thank you, Mike, for supporting me.
Like that concept in itself is people think that it's going to be easy, and you coming from out of state into a new place, how to
Yeah,
create your book of business.
my sphere, my friends. Only people that I knew when I moved to Texas was my husband, and the only way that I got introduced to Mark was from my customer service to one of Mark's best friends. And so it just goes to show that how you treat people really comes around. But I started this business with zero, like no friends, no family.
I think you have a friend now, right?
You got it.
It's questionable. So today was Sunday. No, not today.
Also, shout out Tom Mosley. You're the man, by the way.
Yeah.
He watches these. Lucky for us. Yeah. So what was I saying? The idea of okay. So you mentioned something that also rings true all around, not only on the lending side, but on the real estate side as well, which is the idea of being an expert. You didn't say it in those words, and that's fine, but you can't beat your chest because you have earned the stripes, you have sharpened your tools enough, etc., that when you get a credit pool that a new novice, even seasoned loan officer that's not in the trenches, learning the guidelines, knowing how to interpret and leverage, you're able to go, okay, there's something here. That's step one. Step two is actually telling the customer the truth. Hey, guy, girl, whatever. This is what needs to take place next in order for you to become a homeowner. There's a lot of lenders out there that may or may not still be in the business that have a tough time with that.
Yeah.
They become yes men, yes women, yes. And what ends up happening is they go under contract on a property because they don't want to let their realtor down. And in essence, it's only going to catch up with you.
Yeah.
Whereas we're able to, and I'm hopefully speaking for everybody here, say, hey, you're not ready yet. I need you to do this, this, and this. Relay that information to the realtor. And I promise you 9 times out of 10, the realtor respects it because 1, they trust that you know what you're doing. 2, they know that you're going to see this through. And 3, the deal's not going to fall apart just because you said yes to it.
Yeah.
And
Well, just right now, right before this podcast, I was on a Zoom meeting with a buyer, and he just told me, he was like, "Yeah, I wish I would have met you sooner, so that we could talk about this more." But he met with 2 lenders prior to me, VA buyer. He's used his VA before, and the other 2 lenders that he was working with didn't even know that he could keep using his VA, and so they only took him the route of going conventionally. Didn't realize that he's used his VA actually twice, and he's looking to use it again.
Right.
And they didn't know that was even an option.
wow.
And so he was like, wow, that's a huge difference going conventionally versus using my VA
Absolutely.
versus, what money I have to put down. But 2 days realizes that. So there's just a lot of lenders out there that kind of just
Don't know.
don't know, or they're just kind of, all right, well, we'll get this done.
Well, a lot of the situation, and I realized this a while back when we opened the branch down in Brownsville, is once you get accustomed to a type of program that feel comfortable for you as the loan officer, you tend to push that product because you're, and I don't want to say that it's steering when it really is, you know, they just feel comfortable promoting that product, if that makes sense.
Well, also, don't you know that conventional loans are easier than FHA and VA? Duh, that's the word on the street.
Yeah, it's true. So that being the case in the grand scheme, we know that people are dropping out. We know that there's still plenty enough business to go around. In essence, let's go into the topic of the rates. I mean, honestly, I want to get your bird's eye view perspective because they don't have a crystal ball. What do you guys think is going to happen with rates? And then I'll give my opinion at the end. So there's no wrong answers here because we're all like, darts on the board.
My non-political answer is I think if we see movement in rates, we may see them sometime in 2026. But I don't think there's going to be as much movement as people who waited to buy think is going to happen.
Yeah.
They thought, oh my God, I'll wait for them to go back down. Well, what is go back down? What is the new norm?
True.
You know, and I don't think anybody really can answer that question, but I don't think that they're going to go to where people assume that they're going to get down to whatever that number is. Some people have different numbers, but I just think maybe we'll see some movement. I don't think in 2025 we're going to see drastic movement in the rates.
No, I have to agree with you on that. Who else wants to tackle this?
I think rates, if they drop down, which I think they will slightly, like to us, like a half a point, it's like, ooh, yay. But then potential buyers are going to be like, oh, well, if it moved half a point, it's going to move 2 points by the end of the year. I just know it. And that's just not the reality of it. There's no way to gauge. So it's like, you give an inch and they're going to want to take a mile kind of thing. So I don't think that it's even relevant because I guarantee you, even if it got down to 4.5%, which I don't think it will, I'm actually pretty positive that it won't.
Did you say 4.5%?
Yeah. Even then, you know, buyers are still not going to be happy. So the rate gain is a scapegoat for folks who are not wanting to get into it for something else. Because at the end of the day, if there's not a strong enough need or desire for the buyer, they're not going to. They can make up that excuse. That's just me.
That's a good point. Destiny, how about you? What are your thoughts?
I agree. I think that what's going on right now is healthy. It's an ebb and flow in the market that is required. You know, we go in 7-year cycles with, you know, economic data, and that's where we're at right now. And so I think that I don't talk to people about rates, to be honest with you.
Yeah.
Like when they ask me, I say, it doesn't matter. Let's find a payment that works for you now, and we'll refi when rates go down. It'll be even more affordable. Or, you know, having a client come and be like, I cannot afford more than $2,500 a month, but I have 5 kids. What can I do to get this payment down? Okay, well, sell their concessions. You know, I do a lot of VA. You've seen, you know, I have a loan right now where it's a 6-point cost of that on the rate. We got the payment they wanted, you know, being that loan technician and not letting people get derailed by hearing a 6.5, 6.75, making it a 4.99, making it a 5.25, whatever you have to do to make it affordable for them. That's really the focus that I like to.
I love that. I truly love that for many reasons. And the idea, and it used to drive me absolutely insane that people would lead with rate. I was the first loan officer that if you led with, what is your rate today? I'm sorry, but I'm not the best rate. If that's literally all you're looking for, go down the street to RBFC. But I guarantee you, you're going to call me back after you call them and you don't qualify.
Right.
Or you can't put 20% down, or. And the reason for that is we're not necessarily charging you for our service. No, we are market rate, and we are competitive with all those. But the idea is we don't get to control that stuff. And the one thing that we can control is educating that consumer on the equity, on the opportunity. If you're really concerned with interest rate, let's talk about your credit card bill. let's talk about you're eating out. Absolutely. I mean, if you're truly concerned with saving money, I'll bring that stuff to the forefront. And then they're either going to dislike me really quickly or they're going to respect the shit out of me because somebody finally told them what is really important and brought it up to them.
Right.
In a safe space, so to speak. But yeah, I like that concept. Nicole, you got something?
Yeah, just people with these car loans, man. Like, you want to eat that. We're talking about purchasing a home, which is an appreciating asset, which is something that increases in value over time.
Mhm.
But yet you're going to pay $1,100 a month on something that's going to lose value the moment that you sign the dotted line.
Literally.
Quite literally.
Unless it's a class.
Yeah. And so then you're,
Or a different.
that's what I'm up against. I have 3 people, and granted, I did see their vehicles because that's where we had the Zoom calls, but their cars are falling apart.
Yeah.
And the cheapest cars that they could get come with a $600 payment. And these folks, I mean, $600 on somebody who's, it just pains my heart to see the car loan payment.
I always love the one, hey, like when you're going to have to live in your homes, in your car. You can't do that. And if you want to, by all means, but we're in Texas. It's not like you're not going to get very far doing it that way. So before I give my opinion on the rates concept, Tom Mosley sent me this yesterday.
Oh,
Literally. So JC, if you could throw this up. Yeah. Good. Okay. So I don't know if the sound is on, but I think you guys are in yet. I'm going to wait for the market to fall to my price. Okay, 2021 roll around, 2022 roll around. But 3 roll a couple before. Hey, nice to see you again. I'm ready to go ahead and buy. Let's start the paperwork. Sure, dumbass. I mean, that in itself is a indicator of what is still yet to come if rates drop. So I had somebody tell me yesterday, I was talking to them, and they said, spitefully, I thought the rates were going to come down now that Donald Trump's in office. And I said, unfortunately, Donald Trump does not control rates, nor was that a promise that he made, because I watched it pretty thoroughly on both sides. Just wanted to see where my tax dollars are going, because it would pay a little bit more on this side of the tracks. And that concept, that philosophy is something that we're going to have to continue to educate home buyers, renters, even realtors in many cases about. If interest rates were to drop, and it's this simple as supply and demand, if rates drop, now all of a sudden, all of those people that we've pre-qualified for the last 2.5 years are going to throw their hat in the ring. And what's going to happen? 2020 all over again. But instead of it being 2020 at 3% rates, we're now 2020 at 5.5% rates.
Mm-hmm.
Think about that concept and that logic. That quickly turns, as much as I'd love to see it, I really would hate to see it at the same time. Because the affordability issue that we're having with all of our buyers right now, and I don't think it's an affordability issue, it's an expectation issue. Mm-hmm. Number one, it's going to be way, way, way more dramatic. The idea of multiple offers, having to make an offer over what the list price is, paying cash, pulling money from their 401k. Isn't it crazy how for the last, 13 years that I've been doing this, nobody ever has any money. And then all of a sudden 2020 rolling around and everybody's got a 401k that they can pull 20 grand out to pay over and above the list price. But to the simple logic in that, it is an equation. You can't raise the rates, lower the rates too much, too fast, because it affects trickle down things. And in this case, it directly affects the price of our homes. As much as I'd love to see the value of my property go up, I damn sure do not want to see those taxes go up. You know what I'm saying?
I really wish people would listen when we say that. I think they think it's a sales tactic. Oh, you're just trying to get me to buy now. Go into ChatGPT. 7% rate versus a 5% rate, your total interest loss, or not getting your closing costs paid for because you're in a multiple offer situation. So you're coming up with 10 or 15 grand, plus you're paying $10,000 or $15,000 more for the same house. you lost so much more money than that simple interest calculation that you were so worried about.
I'm glad that you said that. JC, throw that thing back up. Let's see how smart ChatGPT is. Just for shits and giggles. If mortgage rates were to drop by a full point overnight, what would this do to property values in the U.S.? If mortgage rates drop full percentage points overnight, it likely several immediate and long-term effects on the property values across the United States. Increased affordability, higher demand. So essentially, you'll be able to afford more, but there's going to be more demand. By the way,
Wait,
don't worry.
you just said that.
Okay, I was like, what? What did you do? Home prices could rise rapidly.
Mm-hmm.
If supply remains constrained, prices could jump quickly as buyers compete for available homes. A highly competitive market, bidding wars could become even more common, further accelerating prices increases, refinancing surges. This is possible. I do see the need for refinances. And that will be our next topic as we go into this short-term, long-term effects. In short-term, expected jump in demand and spike in home prices due to buyers rushing to lock in their rates. Long-term, however, home values could stabilize depending on how much supply catches up with the demand. And I don't think that you can kill that. I think if that were to happen, you would finally see a lot of folks that are currently living in their property waiting to buy the next home, upsize. You might see more of them putting their homes on the market.
So then the market might even be flooded, even though the demand is higher. All of a sudden, thousands of people with 6% rates are listing their house.
So I do want to go back in time. Remember when it was the huge marry the house. Yeah. So guess what's happening right now? People are saying that they're waiting for home values to go down. It kind of has, because I have a couple of those folks who've been trying to refinance out of an 8.125% rate. They bought the house with $10,000 in equity. They did use down payment assistance.
So then keep going, and we'll put that into perspective.
Yep. So they bought it at $299. The loan was for $309. Their value was at $315 when they purchased, so they had $6,000 upwards of equity. And 2 years later, we are trying to refinance 3 different times, and the appraisal has come back $8,000 lower. Mm-hmm. So it's come back at 301, and they're upside down. They can't refinance. So that is not great advice, but it also goes to show that everything that the world says about the housing market isn't always exactly what you're going to hear. Like, that sounds like a great idea.
Yeah.
Well, you got to weigh your options, but that's all I need to say.
Well, I am proud to say that I never adopted marry the home, date the rate. Why? Because one, I'm a nerd, and the idea of that concept to me sounded salesy, because there's so many holes that could be poked in it. At the end of the day, if your buyer is comfortable with the payment that they're looking at right now, pull the trigger, because it can only come down from there. Technically, it can also go up from there because we've got insurance that is on the rise as well, right? But at least it's not going to go up dramatically or anything like that. But that concept of marry the home, date the rate, I think it's gotten a lot of folks in trouble at this point because they depended upon that date being a little less time than they
it's an engagement now.
Yeah, I'm like, what the hell? How can I get this person to move out of my house?
Yeah.
I was always more of a big advocate for telling people when should I buy? When should I buy? I just tell them when you're ready to buy, you buy.
Yeah.
And that's why we have the Zoom meetings. That's why we have more in-depth meetings with people opposed to just, oh, you're approved, you're here, you're ready. No, let's sit down and talk and look at everything, because all I can see is what's on paper. Mm-hmm. I don't know your living. I don't know how you spend money. I don't know what you do outside of what's on this paper. Mm-hmm. So when we have that meeting, we go over more than just what's on that paper. You're ready to buy it. or you're not ready to buy. I'm sorry. Let's set up a plan for you when you are ready to buy. And that's what I was more of a big advocate for than, marry the rate and be good at the house.
Did I ever tell you, and I know you've heard this before, Destiny, you may or may not, but my first year in the business, me and Austin Pantuso did a lot of business together, and his dad taught him this because we'd have buyers that we couldn't figure out why they didn't want to move forward or what the situation was. And his saying or his slogan that rings home still to this day is a buyer has to be three things. They have to be ready, willing, and able. If they're not one of the three, then it's not going to work. You can be ready, but not willing. You can be ready, willing, but not able. You can be able, willing, but not ready. Any variation of the three. But in order to capture your dreams of becoming a homeowner, you've got to be ready, willing, and able. 1000%. So the concept of the DPA and the values, I want to talk about that for just a moment here. We are seeing a lot of new construction, and this could actually lead into the next conversation. We're seeing a lot of new construction lose value. And is it really lose value, or did that buyer just buy at the wrong time? And then when I say that, I also want to add the fact that don't feel too bad if you are in that situation, because the answer is time. At the end of the day, you live in Texas. Good choice. The idea is, as long as you own the home, it will eventually catch up in that case scenario that you purchased a brand new home, they gave you all these incentives, but they kept the price high. And then fast forward a year and your neighbor just bought the same house $100,000 cheaper. Whoops. It's okay. But now you just have to keep that home. And that doesn't mean you have to live in that home, but you convert it to a rent, an investment property, etc. But the idea, who was it? Was it Warren Buffett that said, don't wait to buy real estate, then wait? That's the whole name of this thing is there's going to be ebbs and flows in everything that we do, the rates, the values, the equity, the opportunities that you have. But at the end of the day, as long as you hold on to it until the right time, it'll be just fine. And I don't think that there's many case scenarios that the buyer or the homeowner has to sell their home. And if you're in that situation that you have to sell your home, good news is you have something to sell.
I always tell everybody, just get into the game.
That's right.
There's too many people that aren't in the game and they're trying to play the game. You're not in the game. You don't have a home. You don't have equity. Like, somebody may be struggling with whatever it is, but they're in the game. They have options. You don't have options. You're still paying somebody else's rent.
Yeah. No, you're right.
Get into the game.
That's a very good point. JC, are we in about 30 minutes, 40 minutes?
45.
45?
We started like 7 minutes out.
Okay, so
Not 35.
let's get to moving on this. Just kind of wise. Okay, so I've got a couple more topics for you guys. We've talked for willing, able, new construction. I don't really want to beat them up too much because they are unnecessary evil, unfortunately. At the end of the day, we can't control what they are doing, offering, what our realtors are doing, offering. All we can do is educate as much as possible. We're not the type to steer, but there are leading indicators as to determining if a buyer is going to go that route, or even if a realtor is going to start sending them that direction. You guys want to talk about that for a bit?
I just had the conversation a second ago. I always tell people, if you go new construction, there's nothing wrong with it. And they probably have an in-house lender. You should always apply. I would never tell anybody, don't apply with their lender. I always tell them, they may have incentives, they may have things. But I always tell them, get a second opinion. You should never go to the in-house lender and just trust everything that's being said to you. Get a second opinion. I need a second opinion. Sure, every time that I can.
Yeah.
But I always tell them, get a second opinion. Now, not everybody listens, and some people get some things happen to them that aren't great because they think that they know, but we as lenders look at fee sheets and estimates all the time. They don't ever look at them. So always get a second opinion.
Yeah.
When it comes to dealing with new construction.
Anybody else have anything else on that?
Yeah, I'll add to that. So a lot of those builders lenders, their batch buying rates, that's why they're so low. They don't offer every loan product. So on that same thing, they're doing a lot of FHA. Well, some of these communities are USDA. So it's cool that you're getting a 4.99 rate, but you could do a USDA loan with less mortgage insurance because it's a guarantee fee instead of mortgage insurance. And the rate's not that far off, and you just save 12 grand. So shopping is really important because those are great deals, but you might still find a better deal. So I think just knowing all of your options before you pull the trigger is really important in this areas.
Yep. And so to piggyback off of that, sometimes I just won a new build deal because they were doing a down payment assistance program that we offer. And this was a client of mine. And so I took a look at it and I was like, well, I could save you. It's not much, but I could save you $800 at your bottom line. And that was enough for them to say, they're offering me that program and you're offering it, but it's $800 lower for you. And I like your customer service. And they don't have a relationship. They never answer the phone. I'd rather work with you.
Isn't that crazy how much difference a Zoom call with a borrower makes? Mm-hmm. Because they got to see you, they got to relate to you, they got to form a relationship with you, Nicole, the consultant, the expert. And you were able to share screen and guarantee it and educate them on the different nuances to what they're actually going to be getting into. Whereas the paper pusher is on the phone, on to the next. Here's what you qualify and put you in this box. Okay, by the way, I've got all these incentives, and they think that that's going to win them the deal versus somebody that wants to dig a little deeper and understand what they're actually going through. To add to yours, Destiny, the 12K that she's talking about them saving, and in many cases, it's a lot more, comes from the sales price that they are increasing in order to give you these incentives. And that's also why you're seeing your neighbor now buying a house a lot cheaper than you in a new construction neighborhood. Realtors, same concept. Make sure you're educating your buyers on what they're actually going or could possibly experience if they go this route. I'm going to challenge you guys. I just thought about this right now because I was formerly in the car business, and it would happen quite often. And you guys maybe have done this personally when buying a car. But when you go to a car dealership, a couple of things, you don't want to let them know that you have a trade if you are trading. Food for thought, okay? You're going to get a bunch of nuggets right here. The second thing, tell them you're paying cash. What do these two things do? Don't show them all of your cards. The idea behind going new construction is day one, let's say you're playing poker like this. You're literally showing them your cards and trying to bluff them in any situation when there is no bluff opportunities. So if you're going into the sales counselor's office and you and your realtor are on the same page and you say, hey, we're going to tell them I'm paying cash, up until the last minute that they say, hey, this is what the incentives look like with this financing options. That way you'll be able to compare apples to apples straight up to see, okay, tell me what your cash price of this is straight up. Mm-hmm. Okay, great. Now, if I were to finance, what does that look like? Why did that price just increase $60,000? Now they're giving me a 3% interest rate, 4% interest rate. Well, now you know where the money is, the smoke and mirror that's happening behind the scenes. I'm not saying that it is wrong that they're doing that. It is 100%. We have had the opportunity to do that, but did not want to make the commitment to buy those bulk rates. And then what Destiny was referencing is lenders have the ability to go to investors and say, hey, look, we're going to promise you $5 million in loans, written loans by the end of this month. But in order for them to all go to you as the investor, I need the rate to be at 4.99%. Okay, great. But if the 30 days expires and you're at, 4.9 million in transactions, guess what? There's a balloon and everything else is going to go up, and that deal is null and void, et cetera, et cetera. So your bigger builders are a little more inclined to commit to something like that, knowing that they have the volume coming through the door. But even still, once you get to the end of the month, I don't know if you've noticed, but you start seeing these massive incentives increase because they've got to fulfill those notes before the end of the month or the end of the quarter, etc., or else they're going to be upside down on it as well.
Yeah.
So just food for thought, the idea of using the car shopping analogy or car shopping concept. Never when you're buying a car do you tell them that you have a trade. You work the deal on the car that you want to buy. You work it as a cash deal. Then you introduce financing, get that squared away, because at first you want to say, I got my own financing or I've got my own cash. The second piece to that, soon as that deal's worked up, by the way, I've got a trade. So now you know they're not playing with the numbers of giving you different value. Same concept when buying a new construction home. So at least no, both of you. Yeah, let's know.
I want to add to what you said. You said it's built into the price and people don't realize
Yeah.
that. There's no such thing as free money. If you think you're getting
What?
free money, like, people don't get it. It's not free.
There's no free lunch either.
It like Japanese assistance programs, some of them have higher rates. It is not free money. It is a means to an end. It is a temporary solution. Does that new build make sense for you? Or it doesn't make sense to pay $20K more to get $20K free? Maybe, but it's not free money. It is not free money. There's no such thing.
I also, one thing kind of similar, right, in between y'all is, people always like, oh, you took them to new builds, or I'm really going to go buy a new build because of the incentives. But what people don't know is we as retail lenders can get you almost very comparable deals on a pre-owned home because it's just with negotiations. It's, hey, realtor, I need to buy down this rate, but they need to be in inner city where there's no new builds. And so I need you to really go to war for us and ask for everything. And then we can buy down the rate. We can get them. It's the same concept. It's just not.
It's not that way. I'll help you here. It is the same concept, and it's not necessarily apples to apples. It is definitely the same concept, but we are bound by the max seller concessions because all the contributions have to show up on the closing disclosure for both parties. Whereas these folks can do this behind the scenes, and that's what you guys are not seeing. Is the rate buy down in bulk. And well, they didn't charge me any points to get to this rate. No, they didn't. They literally rolled it into your purchase price. That's exactly right.
But it's also negotiations, right? Because buyers want to buy, sellers want to sell. So depending on how much we need to ask for in concessions, if that pushes us up, then we need to offer actually a little bit less. So it's just a game, and that's the work. That's the technician part that
Yes.
Dustin was saying. We can get you a very similar concept of a deal. There's options out there.
Absolutely.
Well, something that's always stuck with me that you brought up a long time ago, one of the realtors that you dealt with, he said, when I go to new construction, I take a buyer's new construction, we put in an offer.
That's right.
We don't even just go, oh, these are your lender. Put in an offer first. I mean, you can still get those incentives and put in an offer. I think new construction has
Andy Hilger, Marcus
exactly what it was. Yeah.
The goats.
Yeah. So yeah, that's so powerful to me because at the end of the day, you could still get those incentives if you just go in and put in an offer. New construction had such a grip on everything for so long that it's starting to change a little bit, and you can see that to where they're not. You would still go put in an offer now.
And I'm glad you mentioned that because there's still might be a PA out there that haven't gone to a class where this was taught, or haven't seen the TikTok video where this was talked about, or haven't had a mentor that lets them know and fills them in on that something. That idea of negotiating a new construction, just like it was a pre-owned, is still alive and well to this day. The idea of the builder sales counselor having the reins of the transaction, that's totally on you, realtor. You're allowing that to happen versus representing your buyer and being their fiduciary, So that's great. Thanks for bringing that up. Okay. So this last piece of discussion, we've talked about rates. We've talked about projections and predictions in the market and what we believe is going to happen. We've talked about buyer sentiment, what they're feeling or what we believe they're feeling based on what we're experiencing right now. I want to ask you guys, and hopefully, I know you'll be transparent. I want to ask you, how do you intend on bringing in more buyers in 2025? We could talk about what you change, what you would do the same, what different types of things you'd be using. We can talk about the activities and needle moving activities that you'd be facilitating. Whatever the case, this is a free for all. I want for you all to be as transparent as possible. And I believe it's okay to do that because at the end of the day, if there's somebody listening that gets something from this and you decide to start doing it as well, good for you. Guess what? That's how I got here. Okay. If you stole it from me, you stole it twice. Who wants to take the wheel? Go first.
So my big plan for 2025 is going to be education. As much as humanly possible, I would really like to educate. And I think at this point, people are trying to be educated more. A lot of the buyers that I'm talking to now are saying, oh, well, I did my research. I Googled this. I looked at this. And so all the things that they're Googling, they don't understand what's right, what's wrong. We're the licensed experts. They're supposed to know. So education, I'm going to try to do some more classes with buyers versus realtors. So I want to try to get some Zooms for buyers to try to educate them on what that process looks like of becoming a homeowner and for investor, because I am a big advocate for setting people up, not just to buy their first home, which is usually never their forever home, but to set them up for their first home to be potentially an investment property or, setting them up for the future.
Yeah.
So education is going to be my main goal of how to bring in more buyers and help them to get into homes.
Now, digging a little bit deeper, because education is a tough thing. You were great at the education side of things growing up. I was not. How do you plan on, or do you plan on attacking the masses, or is it one by one? Like, I'm going to conquer this.
Masses for myself. I'm going to get back into TikTok, into videos, which I used to be into big time.
Yeah, you've got about 76 days left.
Yeah. Get after it. Yeah. So TikTok, Instagram, things like that. I would like to attack the masses.
Okay.
I've never done that before.
The educational side.
The educational with the masses. I've done it, like I said, through my videos in a fun way, and I've never really dialed in on to, the education classes type part of it. So the masses is what I want to go after.
I like that. Who's next? What are you going to be doing?
So one thing for me is I'm big on hosting classes.
Okay.
I have been doing a lot of real estate agent classes, but I am going to into these buyers seminars classes, just a way to break bread and show them it's not that scary. Because one thing I think that I think is different about this group of lenders here is we are the bankers of a bank. We don't work 9 to 5, but more than that, we're not looking for a small pool of people that fit in a small box. We're humans, we're friends, we're companions, and we're along on this journey with you. And I think a lot of people are really scared to start the process because they think that it's very professional, very buttoned up, you have to have your ducks in a row before you even speak to a professional. And while we are professionals, we are also just relatable. And so being able to show folks out there who really want to buy a home but are intimidated that it doesn't have to be super scary. That's how I've gotten to where I am, but I'm going to hone in on that a little bit more and just ease the mind of future homeowners.
So, question for you, Nicole, and I think maybe plenty out there would like to know this, especially lenders that are wanting to fulfill the same kind of concept that you want to do here. I know that you've done tons of classes in person, the conference room kind of concept, and I know that you've done plenty virtually. Have you had a better turnout on one or the other, and do you have a feeling as to why or what could help? I don't know.
It depends on the year, right? The time of year.
Sorry, okay.
Depends on the time of year, because right now kids are in school, so people will be able to show up. Now, during the summertime or holidays, a lot of people want to attend virtually because they don't want to roll around their kids or drop off kids at they're my grandpa's, and it's a mess. And I totally get it now, right? Because now I'm a fan. So, but in person is really fun. But virtually, both of them right now are really great. The biggest thing is just being yourself, being kind and in front of a camera. I think that's the biggest thing. But in person is really great. And I'm glad to see that after the pandemic. I like seeing smiling faces.
Amen to that. And growing equity too.
Oh yeah. That's a big thing.
Destiny, what do you plan on doing in 2025? Continue, change, alter to attract new business for 2025?
Mine was similar to Nicole. So I spent like 5 years doing seminars, consumer direct, never to realtors. That's never been my love. But I got away from it last year. And I think, like, we're being really transparent. I think I just got in this weird rut of so many lenders were doing them that I felt like everyone was calling themselves an educator. And I saw things I didn't love and suddenly was like, well, I don't want to be associated with that idea anymore. And I think that was the wrong perspective to take. I think proving that there is a better way to do it and doing what's true to me is really important. So step along the way, because I had great success from it. And honestly, I love getting up there. Like, we make it fun. We play games. We give away prizes. Like, it is so fun. I come away exhausted, but really energized. I really want to get back to that. I want to redefine how I do it. I want to make it very interactive. I want to talk at people. I want to have open forum. I want them to ask crazy questions, annoying construction level questions in front of everybody, and let them dump those questions out in a no pressure environment where I'm not going to try and run their credit. You know, I really want to get back to that. So that's my main focus.
That's solid. And I will, I'll back you up on the concept of stepping back from doing them because it was flooded from that. I totally get why, because it became something that was more of a facade versus a actual event that they could go and learn and etc. In that process, more so kind of just like a popularity show.
Absolutely.
To say it to you.
Yeah.
So I appreciate that, and I appreciate the honesty in that. So this year, as you guys know, we are rolling out loan bots for realtors, and that in itself allows the realtor to both educate themselves and give their buyers the ability to educate themselves on different loan programs and products, and we're utilizing and leveraging technology. How much of our business do you think, Nicole, Preston, Destiny, each can answer this, because you've been in the business for at least 5 years. How much of your business have you seen evolve into more technology? I won't even go as far as AI, but more so a streamlined technology. Consumers want what they want. And I think, Preston, you had said it earlier about the education concept, but go for it. Anybody.
I was just laughing because I was just talking about this with Jackie about we were looking at documents and somebody didn't send documents the exact right way. And I was like, think about this. People used to have to bring in their documents. Like, it was never a send in document type situation. Yeah. So people had to bring in their documents or fax them over or whatever it was. So just that alone shows where technology is. People have moved the documents, things like that. So, I mean, I feel like our business is now 95% technology based.
Yeah. It's funny that you brought up Jackie. We love you, Jackie. We're the big fans. But I was telling her last night,
that's business, but she played words on a piece.
Yeah. But I was going through my emails last night and I saw in our company chat a checklist for each loan program of what we need in the file. And I was like, I forwarded it to Jackie and I was like, Jackie, I remember when I first got into the business, because Jackie loves paper files. Yeah. I also love paper files, which is a very weird thing for someone my age to say, but I do. And I was like, I remember I would have this on the front of one of those 2-prong manila folder things. Yeah. And I would have everything printed out in order and checked out. And once I was done, I would walk it across the office to the processor. And it would say, okay, this file is in your hands now. And then she would do her thing. And then she would walk it to the underwriter. And then it would go back. And so it literally was, where's my file? Like, it's not just, oh, this is where it's at, but like, who has my file? Like, where is it? And so now it's not like that. Now
the trees we killed.
Tell me a funny story that you bring in. My literal first day in the business, this was, what was it? June
74.
January, February, March, April, May something towards the end of May in 2012. First day in the office. It wasn't the, hey, here's the phone book call, blah, 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 but it was, here's the guidelines. This is where you're going to find your stuff before they uploaded it so you can
Someone
control
actually showed you those. Those are cool.
the
They're really
MRE, MRE,
But
books. Yeah.
they were so large it came in a section of 4.
Yeah.
Like 4 sections.
So that day, literally, I witnessed a loan officer throw a file up against the wall.
It's funny.
That one didn't stick, by the way. Yeah, but that was nuts. It was like walking into a whole new world of, holy shit, did he just really do that? That was okay. I guess he was frustrated. Did they get approved?
I kind of miss it, honestly, because I do. That's just me.
Nope.
But now we don't have paper anything. We have a thing to write on, which also, too, why is this not digital?
Oh, old school sometimes just works.
I'm 50-50 because when they bring you your bank statement, you always get all pages.
Yeah.
Oh, always get everything. Everything's turned right. So I'm 50-50. Sometimes I miss it.
Yes, that is true. Guys, this has been a pretty good discussion. I really appreciate you being so honest, transparent, and forthcoming with your plans, your thoughts, your opinions, and your perspective on all things mortgage related in real estate. It helps our audience and our listeners understand not only the group of folks that I get to collaborate with every day, but it tells them a little bit about our backbone, our beliefs, our standards, our culture, our non-negotiable. This is who we are as a team. This is who we are individually, and this is what we stand for. We are not paper pushers, ladies and gentlemen. We are not the ones that are just going to tell you yes, just shoot out your approval. You're not going to get an approval letter from any one of us without getting your borrower's documents. Yes, we are a smaller shop, but things come in small packages. But that truly being the case, I'm very proud of the fact that not only we just had this conversation and you guys crushed it, to be honest, but the fact that I get to share each day with you all and hopefully continue to add value to what you do. Not many people get that opportunity, and so I appreciate that from all of you. With this discussion, and what I'd like to bring back from what I used to do is just list kind of the key factors of this discussion. Before I do, I want to let you guys, if you have anything to add to this before we close out, please chime in. What would you say to any realtors, lenders, home buyers, anybody out there? We have 20,000 people at least on YouTube.
Loans with Pete Jones. Just be ready, it's coming.
There you go. Anybody else, guys?
Please visit me at iheartmyliquor.com. But I'm willing to take on hard files. Manufactured homes. I can't believe I'm still riding that horse, but manufactured homes, difficult deals. I'm fired up. So I'm not looking for easy peasy loans. I'm looking for the ones that really want it and are looking for somebody to work with them truly. So I'm happy to help.
Destiny, anything on that?
I would just say kind of piggyback off that, like, don't take no for an answer. If the lender's not making the numbers work for you, there is someone who will, and I promise you I will. But do not give up. I think that's better.
Yeah.
And I'll take their easy peasy.
So this discussion was jam-packed in a short period of time with expert opinions, perspectives, and 2 cents on the idea of education. The fact that education is, you don't have to go to school to get an education. Matter of fact, this day and age, it's literally at your fingertips. If you're a consumer, you're a realtor, if you're a lender out there, if you want to get hooked up with your very own custom loan bot, visit reviewmymortgage.com. At the top of the tab, you'll see realtor or loan officer. Click one of those and it'll lead you back to me. The idea behind that is we want to give you the ability to self-diagnose, to educate yourselves on the different programs. And we're not talking about our programs, we're talking about all of the programs all throughout the United States, down payment assistance grants, 100% finance, bank statement, you name it, and it's on there. It's just a matter of whether your criteria fits in the bucket to be able to offer those loans to you. There's three things that a buyer needs to be in order to purchase a home: ready, willing, and able. You cannot take a horse to the water and hold its head down and make it drink. Right? If I tried, it's not possible. Yeah. So those three things are something that you have to make sure that your buyer is ready to do and willing to do and able to do before they move forward. And that's something that we may stop you and say, hey, we've got a buyer that's able and willing, but they're just not ready, et cetera, et cetera. The idea of new construction is we're not saying it's a bad deal, but we are making sure that we educate you on weighing your options and understanding what you're actually getting yourself into. You are PCSing here for the next 2 years and thinking that you're going to buy a new construction home and sell that new construction home within 2, 3 to 5 years and not lose some money, you're outside your mind. The idea is if you happen to find yourself in that situation, you may have to rent that home out as an investment property because at the time of sale, you're going to be competing with that builder still. Then rates versus equity. Throw your hat in the ring, guys. At the end of the day, you're allowing yourself multiple options down the road to tap into for equity purposes, to leverage. And that is, I think, one of the only ways, unless you invent something or hit the lotto, to build wealth in this world, this day and age, is to start putting money into a property until it's paid off. And then you can leverage it, pass it down, et cetera, et cetera. But the idea behind rates is find the payment that is comfortable for you in today's situation. And if that is the case, then it can only get better. The idea of date the rate and marry the home and this person, it's let it go. Let it go. If it is right for you, then you should be able to afford it right now, no matter what the rate is. If you don't, lower your expectations, because that doesn't mean, oh man, then I should just not buy. No, you should understand where you should buy. And let me tell you, there are plenty of options for you. Well, thank each and every one of you for joining this and having such a great conversation, especially first one back in the new year. January 2025 is pretty much in the books. Welcome to February. And thank you guys for tuning in. We'll catch you on the next one.